Hey, hello premium hunters, and welcome to another episode of my weekly portfolio performance update. And this update is for week 17, which was April 21st through the 25th. If this is your first time to my channel, my name is Andrew and I am an options trader, and this is where I pull back the curtain to show you exactly what I do and exactly how I do it. I post these videos each week, typically on Mondays, to analyze my previous week of options trading. I also post videos with general knowledge, just general knowledge type of information about options trading, as well as step-by-step guides on how to execute trades. So, if you are interested in following me on my options trading journey, then be sure to like, subscribe, and hit that bell notification. A quick disclaimer that I am not a licensed financial advisor, and I do recommend that you consult a qualified financial advisor before making any investment decisions. So if you're curious as to why I'm doing this, number one reason is to show you that options trading is legitimate. You can definitely make consistent money through options trading. It's not the easiest to learn. There is a learning curve. But if you take the time to learn options trading, then yes, over time you can definitely earn an income through options trading. And also my other goal is to build a community around options trading. I'd like to get just a group of people that are interested in options trading. Either they're doing it, they've been doing it, or maybe you're new to options trading. And just build a community where people can ask questions, talk about their favorite strategy, talk about different events that are happening, and just create a community based around options trading. So in these videos, what I do is I cover the strategies that I've traded for the previous week. I talk about the goal for each of those strategies. I look at the profit and loss that I generated from that strategy. And then I'll also do a performance analysis. I will typically jump into a trade just to show an example of at least one trade from each one of the strategies that I traded for the previous week, just to show you what it looks like on the stock chart, to kind of give you an idea, a better idea of how it works. Just want to say that if you are new to options trading and you don't understand some of the basic terms when it comes to options trading, maybe you don't understand some of the basic concepts, then I highly recommend that you check out my Demystifying Options video. It is linked in the description below. That will cover some of the basics when it comes to options trading and help you understand the information that I'll be covering in this video today. Then the next thing I'll be covering is my overall performance for the week. We'll take a look at how I performed for last week overall. Did I make a profit? Did I lose money? And then I'll compare that to previous weeks and let you see how I've done so far this year. This is week 17, so this is my 17th weekly video. I've done other videos, but this is my 17th weekly portfolio performance update, and I'll compare how I did this week to each week previously. And then through that analysis, I'll give you any insights that I have gained through this analysis. Now, one thing that I do want to let you know about is I did add a new strategy to the trades that I did last week. So if you want to find out what that strategy was, stick around because I will be covering it later in this video. All right, so I have just switched over to my trade tracking platform, which is TraderSync, and this is where I encourage you that if you are going to start options trading, make sure you start out by tracking your trades. That's one of the mistakes I made when I started out with options trading, is that I was experimenting with the trades, but I didn't have a good way to track those trades. And part of it was that I was not able to find a good platform to do it. But I will say, I have recently come across this platform, which I think is a wonderful platform. It's the best one that I've found, and I've gone through a number of spreadsheets, simple spreadsheets, complicated spreadsheets. I've also tried other web-based platforms like this one, but this one is the best, mainly because it allows me to sync my trades directly from my trading platform, number one, and number two, it's very flexible with how I can set these trades up. So for example, just one example is sometimes I roll trades, and this allows me to track rolls. I can either track a trade as a roll, or I can trade that as two separate trades, which technically that's what rolls are. You're closing out one trade and opening another. But if I want to combine a bunch of rolls together, I can do that with this platform, and it's pretty easy to do. So anyway, I do have a link in the description below if you are interested. I'll show you, you'll see how this works to a certain degree as I go through my performance for the week. And it's pretty slick, so if you do want to try it out, I do have a link in the description below. It is a referral or an affiliate link, so I do get a little bit of money for signing up through there, so I would appreciate it if you do decide to use this platform, or at least try it out, to use my link, and that way it would help support the channel. But enough of that, let's go ahead and get into the numbers. So this is for last week. This is up through week 16. This does not include week 17. And as you can see, my profit so far for the year is $57,833. This is my net return. This is after fees and commissions. This is my gross return. This is before the fees and commissions. And you can see the chart here that it's been growing steadily over the first few months. But then, you know, once April hit, we had those rough days in the market. You can see I lost some ground here. And let's go ahead and take a look at the chart where I can take a look at each week that has closed so far. And one thing I wanted to mention, let's go back to the overall overview. Now, if you did look at previous week's videos, this number is different than the week the number that I showed last week. And the reason for that is because as I was going through and analyzing my trades throughout the year, I happened to realize that I did not have one of my trades tagged as being closed, and so it wasn't being included in my numbers that I show each week. So I was actually it was a profitable trade, so I was actually understating my results. I think it was by about $2,600, but it was a strangle that I did in the gold futures. And for whatever reason, I did not have that one tagged as being closed. So even though this is a great platform and it greatly reduces human error by importing trades, the previous platform I was using, I was putting my trades in manually, and I found a bunch of mistakes that I had made by entering those trades manually. This eliminates all of that, but if I don't tag something properly, then obviously it's not going to display the right results. So anyway, this number is a little bit higher than what I showed last week, which, hey, can't complain about that. I'd like to see higher numbers, but that's, if you happen to notice that, that's the reason why. So let's go ahead and go back to where I was, which is the week closed chart, the bar chart that shows each week how I performed. As you can see, the highest week, or my best profit, was week 5, where I made over $13,000. Now this is the week that had the trade that wasn't properly tagged. So this is higher than it was what I showed last week. It's still the most profitable week, but I think it was around $10,000, just over $10,000. Now it's $13,000. I have had a few losers throughout the year, but the biggest losses came within the last few weeks. Week 14, I had a loss of $4,800, and then week 15 was a big loss of almost $19,000. So, you know, a lot of us are considering that a black swan event. Black swan events happen very infrequently, typically once every 5 to 10 years or so. So hopefully, the previous one that we had was COVID, which was around 2020, so that was 5 years ago. So hopefully we're out of the woods on that. I mean, nobody knows for sure. I mean, that's just part of the risk when it comes to trading. I mean, you're always taking a risk when you trade in the markets. But as you can see in week 16, I did get back in the green, so that's good. And if you want to see if I continued that trend to stay in the green for week 17, then hang around because I am getting into those results now. All right, so the first strategy that I want to go over for week 17 is the poor man's covered call. I did have one trade in the poor man's covered call, so it wasn't a huge winner for me. I didn't hit the lottery on this trade, but I did make $17.73, just under 18 bucks. But, you know, it's income, so I am not going to complain about positive income. Let's go ahead and take a look at the chart. Now, I will say that I was also trading this. So you can see I'm currently trading it on NVIDIA. I was also trading it on Palantir, but when we got into the rough market patch that we had there, I was backed into a corner with some margin calls. I was really low on margin and I had to free up some margin. And one of the ways I did it was by closing out a Palantir Leap that I had. I made some money on that. That freed up some buying power, but that removed my ability to trade the poor man's covered call. And the reason is because, as you can see here, this is, let me see if I can get this situated here. This is what the chart looks like on a poor man's covered call. And let me explain what's going on here. The green line is a call that I sold, and I sold the call against this long-term call that I own. I bought this long-term call several months ago. It has a strike price of $80. And the reason I bought this was because I have a positive outlook on NVIDIA. I think that stock is going to go up over the long haul. And by buying a call, a long-term call, I don't have to worry so much about theta decay because it's far out in time. I am experiencing theta decay, but not that much because it's so far out in time. And the fact that I am able to control 100 shares of the stock for a lot less capital than what it would take if I bought the stock outright, that is worth the offset of the theta decay, in my opinion, especially with what my outlook for the stock is. I think over the long haul, this stock is going to be worth a lot more than what it is today. So that's why I have that call. I own that call, but because I own that call, I can sell a call against it. And that's what I did here is I sold an out of the money, which was a 111 strike price call. I sold it on April 25th and I bought it back the same day, April 25th, for 50% profit. I bought it back for 18 cents. And yeah, it didn't make a huge amount of money, but it's money that I made. I own this call. Why not make some money, some additional money on this call that I own? So that's what I did. All right, so let's go back to the overview here. And so the next, let me pull up the next strategy, and that next strategy is the weekly wheel. So let me pull that up here under setups. I can select the weekly wheel, deselect the poor man's covered call. And here we have all of the trades that I traded on the weekly wheel. And if you want to learn more about how to trade that strategy, I do have a video that describes a step-by-step process on how to do that. It's called Printing Money with the Wheel of Options Strategy. So I do have that linked in the description below. Definitely go check that out if you're interested. But you can see here that I made $1,260 last week on this strategy. Now, I will say that I am not making as much money on this strategy as I have been, and that's because of the market sell-off. That had eaten up a lot of my buying power, and it forced me into selling some of my underlying stock at a loss. That's where I took the $18,000 loss that 1 week. And also these stocks are trading below the purchase price of where I bought them. So typically I am trading this strategy on Palantir, Google, and Amazon. And as you can see, there's only Google and Amazon here. And there's not as many trades that I normally do in those stocks. You don't see as many closed trades as what I normally have. And so, yeah, my profit, my income that I'm generating off of this strategy is lower than what it has been in the past. I do want to point out this loss that I have in Google. That was a mistake. I forget what happened here. I think, oh yeah, what happened was I put in an order to close this trade at the market rather than at a 50% profit. And so it went ahead and closed out at market, which was essentially the same price that I paid for it. So I ended up losing, what, $6 or $13.61 after commissions and fees. But it is a loss nonetheless. But let's go ahead and take a look at one of these strategies on the stock chart just to show you how it works. All right, got the chart open here, and the blue line is where I bought the stock. You can see I bought this stock at 202.50. I have been running the weekly wheel on Amazon for quite some time. I had been selling puts, collecting premium on those puts that I was selling, but eventually one of those puts went in the money, causing me to have to purchase the stock. That was a 202.50 put. So I ended up having to buy the stock at 202.50. But you can see here that I have a cost basis of 173.26. And what that is the cost that or the price that I paid for the stock minus all of the premium that I've collected by selling puts. And then after I bought the stock, I sell calls against that stock. And so that's what I am continuing to do. So each time I sell an option at this level, I record the premium that I collect because it's driving my cost basis down further and further each time I do that. So here's where I sold the call. This is a 192.50 call. The reason why I track my cost basis is because it lets me know where I have to sell my calls. If I sell my calls below my cost basis and the stock shoots up above the strike price of the call, then that will force me into a loss, because then I will have to sell that stock at that strike price. And if the strike price is below my cost basis, that's a loss. Now, if you watched my video on demystifying options, you know that the further away from the stock price you sell the call or any option, whether it's a put or a call, the less premium, the lower the amount of premium you're going to be able to collect. And that's part of the problem I'm in right now, is that the stock has gotten pretty far below my cost basis, which is limiting the amount of premium that I can collect when I sell these calls. But here on this specific example, you can see that I sold this call here. I sold 12 contracts for $1.59 at a strike price of $192.50, and then I bought them back here. This is where I bought them back on April 21st for 73 cents. Again, I sold them on April 16th. So I did have this trade open for a few days. And then at the end of the day, I was able to make $1,018, almost $19 on this particular trade. So going back to the dashboard, you can see the total was $1,260 even on the weekly wheel. So positive number is always a good number. All right, so let's go ahead and switch over to the next strategy, which is the covered call. A covered call is when you're selling calls against stock that you own. And I own stock in Tesla, Palantir, and Google. And so I was able to make a total of almost $2,500 on my covered calls. And let's go ahead and take a look at one of the examples. All right, so here's the stock chart, and there's really not a whole lot to look here. It's a pretty simple strategy. I own the stock, and so I'm selling calls against that stock. I happen to own 1,900 shares, so I'm selling 19 contracts against those shares. Here's where I sold the call. It was a 105 strike price. And this is popping up 4 times. And the reason it shows 4 times, I mean, the number of contracts adds up to 19. It's just that when the order filled, it didn't fill all at the same time. There was actually a little bit of a time lag between these fills. So you can see that the stock stayed out of or the option stayed out of the money. The stock never breached my strike price. And I sold this on the 9th of April. I then bought back all 19 contracts. Let's see, I sold these contracts for $1.47 and then I bought them back for 96 cents. My profit target is normally 50%. I'm running under 50% right now on my profit target, and that is because of what's going on in the market. I'm taking smaller profits, and that is a way of mitigating my risk. I'm taking the profit while it's on the table rather than waiting longer for more profits. And that's just a way of mitigating my risk and making sure I can take the profits when they are there. So in any case, I was able to make $951.94 on this particular trade. And if we go back to the dashboard, my total profit for the covered calls for last week was just under $2,500. All right, so now let's get to the new trade, the new strategy that I traded last week. And let me pull that up here real quick. This was a 0 DTE, which I have right here. And I only did one trade on this. This was on the SPX. And I'm going to talk a bit about this strategy here and the reason why I'm doing this. So like I said, I've decided to start experimenting with 0 DTE. And what a 0 DTE means is that you're getting in and out of this trade on the same day. The 0 DTE stands for 0 days to expiration, meaning that the option that you are trading expires on the day that you're trading it. With 0 DTE, you can make quick profits, but just like anything else, you can also make quick losses. So there's no guarantee with the profits. One of the reasons I haven't been trading them is because they can be a lot of work. I mean, there's 0 DTE. So unlike the strategies that I've been using where I can put in a good to close order for a 50% profit and just wait until it closes out, this you have to monitor throughout the day. So there is more work involved with this. But now that I have a little more time on my hands because I don't have as many trades closing out because of the position that I'm in, I figured this would be a good strategy to maybe take a look at to get myself more involved and maybe generate a little more profit. Now, a 0 DTE is just the expiration cycle. It's not really the strategy. I guess it's in a way it's considered a strategy, but you can use all kinds of different trading strategies with the 0 DTE. And the one that I used last week was an iron butterfly. So I've got this pulled up to show you what an iron butterfly looks like. Basically, when you put on an iron butterfly, what you're doing is you are selling a call and you're selling a put at the same strike price, and you're collecting the premium for that, and you're selling those at the money. So basically, the strike price that is closest to where the stock is trading at that particular time. So in this example, if the stock was trading for $100, we would be selling the 100 call and the 100 put and collecting the premium for those. And then what we do is we buy wings. So as you can see here, in this particular example, they purchased the 95 put and they purchased the 105 call. And what that does is it limits your loss. So this is the risk profile that shows you where your profit and loss would end up. So if the stock expired at the end of the expiration cycle at the 100 price level, that's where you would maximize your profit. And if it ended up trading below $96 or above maybe 104, then you would end up with a loss. However, you can see here that the loss is limited. So it is a defined risk strategy. Now, when I put this on, I'm not looking to make the maximum profit here. Of course, that would be great if I could, but it's going to be very, very rare where the stock is going to end up at the exact position where you'd be able to maximize profit. All I'm looking for here is a 25% profit. So what I do is as soon as I enter this trade, I put in a good to cancel order of 25%. So once I hit that 25%, it closes it out automatically and I take that 25%. If it never hits the 25%, then I will, and if I end up somewhere in here or somewhere in here, I will either end up with the max loss or somewhere in between, depending on where the stock actually is at expiration. But my risk is limited, so even if the stock goes crazy, goes way against me, there's only so much I can lose in this particular trade. The nice thing about the 0 DTE is that you're in and out on the same day. So you're never in these trades outside of market hours, which is typically when most of the news happens. There's more hours that the markets are closed than when the markets are open, and a lot of times we get this bad news overnight and that affects the next trading day. So because we're not in these trades overnight, we never have to worry about how bad news that happens when the markets are closed are going to affect us on the next day for these particular trades. And if the bad news happens while the market is open, then these are shorter term trades, so you might not even be in one of these trades yet. Or if you know that there's a big news announcement coming up during the day, the Fed announcement is a perfect example. If it's a day where the FOMC is going to be announcing what they're going to be doing over the next 3 to 6 months, then you might decide not to be doing 0 DTEs for that particular day. And you can also trade them on days where you have a little extra buying power. There are some days where I have more buying power than other days. And if I have a little extra buying power and I want to see if I can generate some profits through the 0 DTE trading strategy, then why not? I can go ahead and do some 0 DTE strategies for that particular day where I have a little extra buying power and see if I can generate a little extra income off of that strategy. All right, so I'm back in the tracking platform TraderSync here, and I just want to show you what it looks like on the chart here. So this is the stock chart, and again, there's not a whole lot to look at. Essentially, all we have are you can see that I sold the same strike price. If I can get this to show up, let me go back to this just to show you. So here's where I sold the 54.95 call. Nope, this is the put and this is the call. So I sold the 54.95 put here and I sold the 54.95 call here. I collected $12.40 for the put and I collected $15.80 for the call. And here's where I bought the 54.65 put. I paid $4.25 for it. And here's where I bought the 55.25 call and paid $4.35 for that. So all told, with this entire position, I collected $19.60. And if we take a look at the stock chart, you can see I opened it here at about, it shows about noon. I think it was actually around 1300 where I opened the position. The stock was moving up. It's okay if it moves up. We just don't want it to move up too far. and then it started moving down, selling off, and it's okay if it does that as long as it doesn't go too far, which it actually did. And I'm going to take a look. I'll show you where I was actually showing a loss for the vast majority of this trade. But the nice thing is, it did what stocks do, is that it rebounded, it came up, and it stayed pretty close to the price range that it was when I opened this trade, which is exactly what you want. And then so at 15:30, pretty close to the end of the trading day, is when it closed out for a 25% profit. And that's where I was able to make about $480 on this trade, in and out in one day. So what else I wanted to show you here, this is kind of interesting. This is the running P&L chart or graph that TraderSync provides. And as you can see, I was actually showing a loss for the vast majority of this trade. I did have a couple of spikes here, which I think these are anomalies. I don't think, because I had an order in to close at a 25% profit, which this is more than a 25% profit. So either that's an anomaly, or it was only there for such a short period of time that it wasn't able to trigger the order that I had in. But I just don't think, because it's such a sharp move in such a short period of time, that I don't think that's an accurate depiction of where it was at that particular time. I think what you have to do is kind of maybe smooth this out over time to get a more accurate depiction of where I was. But at the end of the day, you can see that I was in a loss position here more than I was in a profit position. But still, at the end of the day, it hit my 25% profit target, which was $14.70. I was able to buy it back for $14.70, which was a 25% profit, and so that one worked out for me. All right, so let's go ahead and go back to the dashboard. Now, all I have to do to see my total profit for the week, which at this point, I made a profit. I didn't take a loss because I only showed one loss, which was a mistake. But all I have to do is deselect the 0 DTE strategy here. I already have my tag for the week 17 selected. So this now shows me all of my strategies for week 17, and my total profit for the week is $4,257.21. You can see here my setup widget shows me how much I made for each one of these strategies. The 0 DTE and the IBF, that's the same trade. I have two tags for that because I am going to be experimenting with other 0 DTE strategies. I'm gonna do some iron condors this coming week. So if you want to see how I do with these 0 DTE trades, make sure you watch each week, because I am going to be doing more and more of these 0 DTEs. So stay tuned to see how those pan out over time. But yeah, so the iron butterfly and the 0 DTE is the same strategy. You can see the covered call, the poor man's covered call, and the weekly wheel strategy here broken out in the setups widget that I have. So again, I'm still in the green for week 17. Let's take a look at my cumulative total for this year. In order to do that, I just select all of the weeks closed. I deselect 2024 because I'm not looking at that right now, and I deselect this merge tag that I have. And this shows me the total for the year so far. Through week 17, my total profit is $62,090.21. That gives me an average of $3,652.38, which is a little bit higher than what my average was for week 16. Week 16, the weekly average was $3,614.56. So moving in the right direction, not a huge move, but it's moving in the right direction, and a little or a small move in the right direction is better than a huge move, much better than a huge move in the wrong direction. So it's even better than a small move in the wrong direction. So looking good for week 17. Let's go ahead and go to the report section so that we can take a look at the graph. Oops, that's the wrong section here. Yep, here we go. This is the report section, and this is the graph year to date. So we see a little bit more progress in the upward direction, and we'll take a look at the week closed here. And yes, we see some more green, not quite as good as last week, but I love green, and every time I see green, I'm happy, much better than the red that we've seen here as of late. So I'm definitely happy about that. So with week 17, I am seeing more and more buying power gradually coming back, and if the market continues to settle out from the erratic behavior, we'll see volatility continue to come in. I'll see more and more buying power come back to my account. And then also I need to see increases in the stock price of Amazon, Google, and Palantir, because I do have some long-term stock. And also I'm tied up in the weekly wheel for those stocks. So if we see those stock prices increase, I'll see more and more buying power. The more buying power I have, the more potential I have for profits. So hopefully that's the direction that will continue to go. Nobody knows for sure, only time will tell. But I will be continuing to document my process, so make sure you stay tuned so you can see how that pans out over time. All right, so that is a wrap for week 17. Thanks again for stopping by to check it out, or thank you if this is your first time for stopping by. If you have any questions or comments about any of the content in this video, then please write them in the comments section below. I am continuing to add more and more content to this channel, and I am approaching 100 subscribers, so I would love it if you could help me get there. If you're not already subscribed, please hit that subscribe button so that maybe we can get to 100 this week. I'm pretty close. So anyway, thanks again for stopping by, and I look forward to bringing you more better options next week. All right, take care, everybody. Bye-bye.